about 300 points. But let's kickstart this conversation with a corporate interaction. It's a decent performance from Cera Sanitaryware in Q2. The revenue growth has picked up pace. The company's clocked in a top-line growth of close to about 11%. Margins too at 16.5% marks an improvement quarter-on-quarter and on a year-on-year basis. Ayush Bagla, the executive director at the company, is now with us on the show. Ayush, first question is on the full-year guidance. When we last spoke to you, you had guided for a 17 to 19% revenue growth. In the first half of the year, you've done about 10%. So do you maintain your revenue guidance of 17 to 19% for FY24?
Thank you for having Cera Sanitaryware on your show. So, of course, the guidance for adding about 350 crores of top line annually remains. And that was a target we had set for ourselves about 2 years ago. We achieved that for the last 2 years, and we expect to achieve that till September 2025, for where we have set ourselves a guidance of 2,900 crores in top line.
So that is about 2025. But for this year itself, what kind of growth are you looking at? We're asking because first half of the year, you've seen a revenue growth of 10% and you've guided for a 17 to 19% growth. Will second half be better than the first half? Will you see that 17 to 19% growth in this fiscal?
If you look at our past track record, you'll find the seasonality effect in Q1 and Q2 together about 45% of top line. And Q3 and 4 are 55%, and the effect of October sales are already visible in front of us. Even without that, look at Q2. This is the best Q2 ever. So we've never had 475 crores in top line in any Q2. This is the highest EBITDA of 87 crores, also up by 13%. Highest PAT of 57 crores, also up by 13%. Cash and cash equivalents are 751 crores. So on all fronts, this is the best Q2 ever. Yes, to achieve 350 crores of top line, we'll have to gain at least another 200 crores in Q3 and 4. So that is something that we plan on doing.
Okay. So you're maintaining that in FY24, revenue accretion will be 350 crore rupees, which turns out to be about 18-19% growth for the full year. What about the margin outlook? What led to the margin expansion in Q2 and what can you guide? Will margins improve further in Q3, Q4? What's the cost structure looking like?
We have not taken a price hike in 17 months. So productivity gains at the shop floor have negated all raw material volatility, labor price increases, and all input costs have been negated. So with steady pricing for 17 months, we have increased the margins. And both of the EBITDA front, PAT front. So the most important for a company of this size and the varied product offerings is moving the customer to higher price points. So the product mix is changing dramatically. We have now more than 2,000 products which are active products, of which 1,000 products have been launched in the last 3 years. Those constitute about 30% of sales.
Okay, all right, interesting. So I was going to ask you the next question on your product pipeline itself. 699 new products were launched in FY23. You spoke about a strong product pipeline where 30% is coming in from high-ticket products. What's the pipeline looking like for FY24? Will you see products coming in from the high-ticket segment? Can you give us a sense of that?
The 1,000 products which were launched in the last few years, those are all part of the expensive PVD and black matte ranges in faucetware, and then the rimless wall hungs in sanitaryware. Those are products that customers are now demanding, and the price points are not really that relevant for a customer standpoint because the product is going to last them 10-12 years. So we understand where the market is heading. The product life cycles have reduced, and that has forced companies like Cera to respond with newer designs, newer functionality on a regular basis. So taking all those factors into account, yes, new products which are already 30% of sales will go up to maybe 33, 35 in a few years.
Got it. What's the expected ad spends for you in the second half of the year, full year FY24? And getting back to that margin question, will margins expand from Q2 levels of 16.5%? What could exit margins look like?
We've been increasing margins between 50 and 100 basis points annually. We plan on doing that again this year. We've increased 28 basis points in the first half. And as far as ad spends are concerned, they're normally 3% of sales, so they'll be around 65 crores for the year.
Okay, all right. Okay. Thank you so much, Ayush, for joining us and taking us through the outlook going forward. So you maintain your top-line growth guidance of 17 to 19% and margin growth as well. They'll see 50 to 100 basis points going forward. The stock, though, has come in for some profit-taking despite good set of numbers, down around 6% as we speak. We'll do one thing. We'll slip into a break now. When we come back, we'll discuss a set of another earnings. Ajmera Realty will be in focus on the back of their Q2 numbers. We'll discuss the business outlook going forward. Stay tuned.